Welcome to the Stage Analysis Members Midweek video. So it's Wednesday the 13th of July 2022, and this week I'm going to cover a blog post that I did yesterday, as well as the normal stuff that I cover on a midweek video, the major indexes, the short-term market breadth, and I look at some of the watchlist stocks from the last week or so. But starting tonight, I want to talk about a post that I did yesterday, which was how stocks transition from the stage 4 declining phase to the stage 1 basing phase. As I think it's an important concept to talk about at the moment, as we've got so many stocks in the market currently in stage 4, potentially late stage 4. They have been starting to form base structures. Whether they're forming stage 1 base structures is obviously debatable at the moment in quite a lot, as a vast majority of them are still below long-term resistance and declining moving averages, etc. So I just wanted to talk about some of the key characteristics that we look for in the stage analysis method when a stock is transitioning from stage 4 into stage 1, as people can get carried away and see an initial reaction off of a low, a selling climax into an automatic rally type behavior, like we can see here in LUV. So you might have had a big stage 4 decline. You might have had a deep decline, and then suddenly we get a big selling climax and automatic rally back up towards a declining 30-week moving average, which is still coming down. And at this point here, they immediately think that we're already back into stage 1 just because we've rallied back up towards the 30-week moving average. However, that's not always the case. Sometimes that might well be the move into early stage 1, but obviously often we get a secondary test, and then a deeper base structure will start to form. We might start to get, and might even get up thrust, and then we might form a spring and go through the entire phases of a major base structure. Which, if you've ever studied any of the Wyckoff method, so if we look at the Wyckoff accumulation schematic, which you can find on stock charts, other sites like Wyckoff Analytics, etc., they've all got variations of this and other schematics as well, where it doesn't have a spring. But basically a base structure is broken down in the Wyckoff method into these 5 phases: A, B, C, D, and E. So initially you have a selling climax into an automatic rally, and then a secondary test. And then once you get the turn up from the secondary test, it starts to move into phase B, and then a potential early up thrusting action some of the time. And sometimes you get a thrust at the bottom of the range, a down thrust, which a little bit of a shakeout, where another further testing basically during phase B, which tends to be a longer sideways lateralization of the price action as the moving averages start to flatten out and price starts to move above and below them, before we start to move into the more actionable areas of a base structure, which is phase C and phase D, where the early entry points in the Wyckoff method happen basically from phase C at the spring and the test, and then as you move into phase D, and then the sign of strength, which is where the stage 2 breakout occurs, and then the backup, and then moving off into phase E. So if we go back to our current chart here that I'm looking at, so what I've used for the example, so LUV, this was Southwest Airlines from back in the 2nd of March 2012. So I've used an old example, as this is from Stan Weinstein's Global Trend Alert at the time. So I was able to get hold of some copies at the time, when back then he was doing some interviews on the Financial Sense news hours. I think he did 3 or 4 different interviews, and he gave out his email and let people sample the service for a while, as it's obviously it's a very expensive institutional level service, like £60,000 or dollars a year. I think you can get just the newsletter part of it for around $10,000 a year, but basically it's out of the reach of most people in terms of retail traders. So it was really handy to get a look at the service and basically be able to get exact stages of current stocks at the time, as the examples in the book were obviously quite grainy and very hard to see, and a lot of the charts from the time when the book was produced back in 1988 where you couldn't actually get them in your chart service anymore. Like, a lot of the stocks didn't exist anymore, so it was really handy to actually get some real-time examples so that we could start to see the characteristics to look for in the different stages. So when a stock is moving from a stage 4 decline into early stage 1, the initial thing that you want to see is this selling climax into an automatic rally, then a secondary test, and then it start to move up and start to get through that 30-week moving average. It doesn't always manage to form through the 30-week moving average, but a lot of the time it will. So one of the characteristics that you'll see in early stage 1 is the price action starting to move through a still declining 30-week moving average. At that point, often the 10-week moving average, which is this grey dotted line below here, will still be below that 30-week moving average. The relative strength at that point will still be below what we call a declining zero line. So the zero line is just the 52-week moving average of the stock divided by the S&P 500. So this is, in the charts in the book, you'll see this as a flattened line, which in the original Mansfield charts, which was known as the zero line. So basically this is a unflattened version of that, and I find it actually more useful to use it this way, as the slope of the zero line itself gives you an additional piece of information that you can look at to see whether a stock is early or late in a different stage. So when you're in early part of stage 1, you'll still, the relative strength line will still most often be below a still declining zero line, and price will only just be moving through a declining 30-week moving average. This point in here, so while we're still in the early part of the base structure here, while we're still in the selling climax automatic rally secondary test, at this point in here we're still in stage 4 until we start to move into phase B, start to move through the 30-week moving average and start to close above it for multiple weeks. That's when the stock starts to officially start to move into stage 1A, the early part of stage 1. So you can just call it early stage 1. Substages can be confusing for newer people, so it's easier just to look at it from the 4 stages and just say whether it's early or late in the stage. So as I said, declining 30-week moving average, price just moving through that. So when you get a breakout and the moving average is still declining, so this breakout here, as you can see, so some people might mistake this for an early stage 2 breakout, but as you can see, the 30-week moving average is still declining at this point. So what this does is actually broadens out the base structure. So you draw your initial base structure using the selling climax and the automatic rally level. So, So this is the start of the base structure, but once you form, if the moving average is still declining and we get an up thrust above and it starts to fall back into the range, we get a higher level that forms. So this is our new top of the stage 1 base structure. So this is where we then look for the stage 2 breakout to form going forward, although different levels could form later on depending on how long the base structure is, if you get multiple tests of a level. So as you can see, what other characteristics we're looking for? You want to start to see you have heavy volume during the end of the stage 4 decline, and then we should start to see, as it starts to move into stage 1, that the volume starts to tail off gradually. It's a very gradual process as the stock is transitioning into early stage 1. Let's look at this from a cleaner perspective. You can see here that the 10-week moving average will start to move back above the 30-week moving average as a stock moves into stage 1. If your 10-week moving average is still below the 30-week moving average, then you're very likely still in stage 4 and just in a base structure within stage 4, which could make a continuation breakout lower. We need to start to see that price action moving above and below the 30-week moving average, and the moving averages themselves start to cross above and below each other. So if we look at this from a daily time frame, there's obviously many people won't use the weekly charts. They'll only be looking at daily charts. So you can see on this LUV chart that the change of behavior in October was the selling climax into the automatic rally, and was the strongest counter trend rally that it had while it was still in stage 4. So it had multiple little mini rallies up before that, but at this point in here, it had a strong 30% move or so off of the low after washing out. It did start to attempt to base back in August, so preliminary support back in August time, but then we had this washout low into a selling climax, and then a sharp rally back up again. So this is the start. This is where you would mark the start of the base structure. But as you can see on this chart, like you can see in many charts currently, you've got this strongly declining 200-day moving average. So when the 200-day moving average is still making a sharp downslope like this, you're very likely still in stage 4, or maybe only early stage 1. So you can see the upthrust here occurred just above the 200-day moving average. So this is another trick that you can use in the stage analysis method, in terms of when you get the first swing high that forms above the 200-day moving average, can often define where the stage 2 breakout level will be. So this is your key level to watch going forward as the base develops. You can see on the daily chart here that the short-term moving averages, while the stock is attempting to base while it's still in stage 4 here, start to move above and below each other. So the 21 days moving through the 50-day, you can see they're still well below this strongly declining 200-day moving average. And you start to get those short-term moving averages start to move back above as it moves into the early part of stage 1. And they'll start to crisscross each other. So as I said, relative strength versus the S&P 500 is still below the 0 line. So that is something to watch out for. So the markup, taking the markup up, you can see this chart looks like quite a lot of the IPO type stocks at the moment that we've been showing in the watch list of late. There's a lot of stocks that have this look at the moment, but this is only early stage 1. It's not staged. There's not stage 2 at the moment. It still could have quite a long way to go. So if we go further into the future, going back to a weekly chart here, so you can see this point here was where that chart was back in early March here. So I think it was here. Let me go back one. So yeah, so this was the week of the end of that chart. So you can see it took another rest of the year, basically from March all the way through till December, until it made the stage 2 breakout. It did form a VCP type structure. So you can see we had, obviously, the swings were gradually getting smaller, and it was gradually getting shallower near to the end and started to curl up. So you could have got some early entry points in the later part of stage 1B. So as it started to break out from that original automatic rally structure there, but a lower level, but you still, as you know, we've still got resistance levels from multiple points within here. So until it started to move up and out through that convincingly, it wasn't really in stage 2, even though the 30-week moving average had started turning up. So, and then it formed a backup and carried on. So as you can see, as the base structure develops, the relative strength line starts to move above and below the 0 line. And then as we start to move out into stage 2, often the relative strength line will then be starting to outperform the S&P 500 and starting to move off to new highs itself. So that's a typical example of what can happen when a stock is transitioning from stage 4 into stage 1. I won't go through the HAS one now, actually, because I don't want the video to be too long. So let's move on to the next. So